Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Alex Tsukernik. He's the president of NOVR.V Corporation. This is a brand new company, fresh out of the gate, brought to us by our dear friends at Metalla, sort of. It's Metalla, but not gold, is the way I see it. But Alex, it's your story. Why don't you go ahead and give us an overview and tell us what you're doing?
Oh, absolutely. Thank you very much for having me. So we started the company 2 years ago, and just like what we saw in gold and silver, where investors decided that they wanted to own those commodities through royalty companies, we felt that although they hadn't been the case before, that with what was happening with electrification, that copper and nickel would basically transition from being ordinary industrial metals to strategic metals. And we wanted to be ahead of that because we saw the world focused on precious metals quite heavily at the time. But everything that we had seen from environmental concerns, electrification in cars and energy, environment, overall health concerns that you see among the population, we felt that this transition from fossil fuels and decarbonization would only accelerate. So when we looked at the universe of commodities out there, what we saw was that there were two that were the clear big winners. The first was copper, which is basically your main input into all the infrastructure from wind to solar, EV charging stations, the EVs themselves, and nickel, which at this point has become really the dominant ingredient in the EV battery. And so these were the two that we saw as really playing an outsized role, and we felt that it was the right time to put together a royalty company really focused on the projects that will be required to have that energy transition. The big difference between, say, copper and nickel and gold and silver is that the projects are much more capital intensive. You don't really have small copper mines. You don't have small nickel mines. They usually come in the large and larger variety. And so when you look at our portfolio to date, our first acquisition was a royalty on the Dumont project, which is the second largest nickel reserve in the world, fully permitted in Quebec. Our second major acquisition, was the royalty on NOVR.V, which is a joint venture between Teck and Newmont and Chile. It's one of the largest copper development projects in the world. Our third acquisition was really focused on Janus Lake, which is a Rio Tinto project in Saskatchewan, which they're exploring very aggressively. And the deal we just announced this morning was on Taka, which is the first quantum property in Argentina, which already is and is on pace to become truly one of the largest copper development projects anywhere. So you really need those projects with scale that large companies with expertise and capital can develop. And once that occurs, these projects can run for 60, 80, 100 years. I mean, when you look at our copper industry today, it was built by our grandfathers. So what we focused on is you try to find these generational mines, because those are the ones that really make a dent in the sector. And because right now we've really been the only royalty company focused on this, we've been able to add some top-notch projects into the portfolio. So we're pretty excited about that. That said, there's a lot left for us to do, so we're pretty busy looking for more, and that's where our head is at the moment.
All right. Well, that's an excellent and admirably brief overview. I have to say, one reason why we're speaking is that I thoroughly agree with the premise. People, that have sometimes, I think, political views about this electrification and EVs and so on, but you just look at the reality. You look at what's happening in the world. This is, in my mind, clearly a paradigm shift. It's a one-way change. It's not just government subsidies. Consumers want these electric cars. All the major automakers are switching over. So it's happening. And I absolutely agree that copper and nickel are my favorite energy minerals. People think about the cobalt or the lithium, but cobalt's problematic. Lithium is not rare. It's quite abundant. It's hard to compete with SQM and Albemarle. Copper and nickel are key to the whole new energy paradigm. I get that, so you're singing my song. I love to hear it, and I love the idea. But my first question really is, why now? We've got this global pandemic. We've got the world in a tailspin. I get the buy low, sell high part. In terms of, acquiring assets, I can certainly see you guys going out there and buying while copper was sub $3 and so on. But why go public now? Why try to interest shareholders now while prices are still low and people, all they want to hear about is gold and silver?
Well, look, we don't see this as sort of a 1 or 3 or 5 year cycle. I think that what's happening is just a fundamental transition in how we live. And if you're talking about commodities that are so fundamental to it, I think the world will want to own more and more of them over time. So we went public really at the point where we felt that we were ready to grow the company in a really proactive way, and we knew exactly what we wanted to do. And really, we want to be the best way for investors to own those commodities, and I think that appetite is going to increase dramatically over time. But I think you also have to build a track record and a real reputation with the marketplace for doing the right things. But really, I mean, we see a trend that's so strong and powerful. Why wouldn't you be public? You really, I think, need to be out there explaining to people what you see, why this is important, picking up projects. And also, I mean, when you look at our acquisition universe, we often buy royalties on top-notch projects which are some ways from production. For those royalty owners, by far the best way to monetize is to take some of the consideration in shares of Nova, because the market can appreciate sort of a portfolio of strong royalties on projects that have a clear future and can give credit for that today. Whereas if you're just holding something which is going to cash flow potentially in some time, you're just sitting at zero today. So really, as a public vehicle, I think it's just really the only way for us to be right now, because it helps our business tremendously.
And I guess there's no way an outsider could verify that, but I wonder how well that works. It's one thing for Brad at Metalla to say, look at our stock price. You're much better off with stock than you are with just cash because your stock can go up. But you're a brand new company. You don't have that track record. Are people willing to just sort of take your word for it that the stock will go up? Or how do you persuade them that shares are a better option for them than a big fat check?
Well, I mean, look, we did our first financing in January 2019. That was a 25-cent round. I think right now, we're just over 150, I guess, in the market. We're still a relatively new company. But I think fundamentally what we've shown is that we take a lot of care in the things we put in the portfolio, and that the company has a very clear focus. And I think that's been appreciated to date, both because we had investors fund 2 private rounds, and then now we've just gone public. And if you look at the deal we did with Taka, there was about 20% or so that was done via shares. To private sellers in Latin America, which is very uncommon, by the way, because that's a region that traditionally has a very high preference for cash. But so I think we've gotten the benefit of the doubt here from people that see the opportunity and what we can do in terms of what we've done with the company to date. I mean, we've been at it for 2 years, and when we started the company, I mean, the first round was not an easy round to fundraise. We raised $2.6 million. It was a challenging market. $2 million went out the door to pay for the Dumont deal. We had $600,000 left in the bank, and but what we saw was that we can build a really substantial company out of that if we focus correctly. So we didn't just chase anything in 2019. We wanted to go after things that made a difference. And when we did the NOVR Union deal, it took us about 6 months to get that deal done. It was a very, very tough negotiation down in Chile, but we eventually got that done, and we stuck really to our knitting in terms of what we wanted to do. And when we did the financing in February, we raised just below $6 million. We got that done very quickly because I think people saw where the strategy was heading. And then BD Capital came into that round, actually. And so I think they really endorsed it at that point. Right? I don't know if you saw, but right before we went public, on the day of, we announced a $50 million facility with them to underwrite future acquisitions. And so I think they understand what we're trying to do, which is really helpful because it gives us a backstop as well for the things that we want to do in the future. So it really is, I think, just about staying focused and sticking to your knitting. And in the challenging market is really the best way to show that. Because I mean, when things are good, it's easy. It's easy.
Understood.
When it's hard, I think.
Understood. Yeah, and it was good to see. It's good to see BD come in with the 15 million because it gives you the opportunity to write a check if you need to versus the shares. But just to be clear, so on Nueva Union, how much of that was cash versus shares? And on the portfolio that had Janus Lake in it, how much of that was cash versus shares?
Yep. So on Nueva Union, the upfront payment was all in cash. The back-end payment is 50% cash, 50% shares. That's a production. And just stepping back, when we bought Dumont, that was 2/3 cash, 1/3 shares. When we bought Nueva Union, the upfront payment was which was half of the consideration, was all in cash. And the back-end was 50% shares, 50% cash. When we bought Janus Lake, that was 2/3 cash, 1/3 shares. And when we just bought Taka Taka, that was about 80% cash, 20% shares. So that's those are the breakdowns. So I mean, we had a pretty reasonable share take up, especially given the early level of the company. I think as we grow and people see the stock perform over time, then hopefully they'll increase even more.
So, going back to my first question, though, if I'm a prospective shareholder, we're sitting there at the show, you're at your booth, and I'm looking at your charts and things, and you're trying to convince me to buy the stock. My question is, okay, but why buy this now? You're putting this company together. It's going to be a long time before there's any cash flow, and we can see if all of these are development at best, and in the near term, there's a potential for COVID wave 2 to put the economy in a tailspin, copper prices to tank. Why would I buy the stock now, Alex?
Well, I think basically the reason you want to buy the stock now, is that although we live in a volatile world, what we've bought are the things that I think hold value better than almost anything in mining over the cycle. Because when you buy the premium projects, if you actually look at the history of the mining industry, those are the ones that generate the outsized returns. And so when you look at basically the best way to own, I think, any commodities through a portfolio of royalties, whether you're talking about gold and silver, whether you're talking copper, nickel, or anything else, because the royalties give you what? They give you clean revenue. You don't have to worry about the cost side of it. They give you free optionality to all the production expansions. And when you buy big projects, it's almost a guarantee, because these projects, just by their nature, you start, then you get bigger, then you get bigger, then you get bigger. And it's really, I think, the exposure you want to hold. Now, we started the company focusing on the larger end of the development projects because that's where you can build a clear base of value. Our plan from here is obviously we want to bring some cash flow into the company as well. But now we have something that people who hold cash flow and royalties want to bend into as well. Because if you have a shorter life royalty, for instance, and you have some cash flow, but maybe you don't have the same tail, being in the same company that has a Taka Taka and whoever you own can be quite compelling. So it's really just about bringing the right balance into the portfolio and giving all the participants in the copper nickel space a way to find sort of a home within Nova. So I mean, you kind of when you look at sort of the net asset value of what we have, and kind of I guess at the levels that we're acquiring, there's a lot of value that's left on the table just in terms of what you're paying. So that's something that you're locking. That's the benefit for your shareholders. Every deal we've done pretty much has been IRR of double digits going out 20, 30, 40 years. So we model that in up front. So even though, yes, you obviously have your hiccups, COVID, this and that, but you're pricing that into your acquisition prices already. So if you can lock in those types of IRRs on really high quality assets who are favored over time to get into viability and production, and plus you get all that free optionality and the expansions and the explorations for free, and you get that in a diversified portfolio, that's still a reasonably early stage of growth. I think for shareholders it can be a really compelling investment, irrespective.
So sorry, just to be clear here, then there's a possibility for, now that you have some, like the anchors in the mall, right? The Sears on one end and the whatever, you have these big, you're maybe looking for something smaller that would be more cash flow. I mean, say, I don't know, an Etico of the world or some smaller copper producer like that has an acquisition, you could help with that and get you'd be looking at deals like that in the nearer term?
I think what we're focused on more right now is existing royalties rather than origination. I think origination definitely sort of has a future in the company, but you want to get to a certain size and cost of capital before you can do that effectively. Where we see the best market for us right now is really existing royalties, and that we see opportunity in that in terms of adding some cash flow to the company. But over time, absolutely, as you get bigger, then you're able, if you have the cost of capital and you have an asset base which is quality and diversified, the market will give you the cost of capital to originate on better terms than, say, equity or debt could. And I think that's exciting. When you look at the big royalty companies, that's actually when they really made their mark. In a downturn between 2013 and 2016, that's when most of those portfolios were built. We're not quite there yet. I think we have fair way to go before we can make that claim, but absolutely that's kind of what you're trying to get to.
I was also wondering if you have, for your internal modeling purposes, do you have a minimum copper price and a minimum nickel price that you look at any project and say, okay, this has to pay even if copper goes down to $2.50 or $2 or something like that, or nickel goes down to $4, this will still pay. Is there a cutoff like that you use?
I mean, look, we're not. I mean, kind of, we used to model at 275. That we felt that was kind of probably well below the incentive price for projects. So we wanted to be conservative just in case, in terms of kind of, you never want to get too far ahead of yourself. At this point, we're probably closer to $3, in terms of how we look at it. But you can't build a copper mine at $3. I mean, let's just be realistic. I mean, this is a massive undertaking. So I mean, copper is going to have to go to $5 and well above that probably in order to get any real supply response. So we model these things conservatively because you never want to take too many liberties with that. But just being realistic with you, if you're going to go and sink $2 or $3 billion to build a copper mine, you're not going to be looking at 350 copper as your barometer. You're going to say, okay, I'm only going to do that really when I see copper at 5 and above. So that's realistically what you're looking at. But for our just modeling purposes, we use 3.
Fair answer. I was also wondering, I noticed in your PowerPoint says, only copper nickel royalty company. Maybe it's rude to ask, but is that really true? I mean, there's so much money pouring into the space and so much interest in royalty companies. Maybe somebody else hasn't listed yet, but to your knowledge, you're really the only copper nickel focused royalty play out there?
That's as far as we know. We know there's one other nickel royalty play out there, Tsukernik. But from what I've seen, they don't really touch copper. So as far as copper nickel, we are, I believe, the only ones out there at the moment. And look, the reason we focused on them is, we're not a base metals royalty company. We are an electrification royalty company. So we saw those two as really playing an outsized role. So we chose them and decided to focus there. If something else were to come along and assume that role that we felt the supply demand makes sense, we could certainly look at it. But so far, we haven't seen anything that really fits the bill.
All right. Another question I had was back to Janus Lake. That's still pretty early stage. I mean, it's exciting for the junior that a major's come in and they have a big spending commitment to fully earn in. But it's still pretty early days there. I mean, if they don't find a Rio Tinto-sized project, they're going to walk. They're not going to spend $15 million if they don't find what they're looking for. So, it's Taca Taca I understand, but Janus Lake is considerably earlier stage. How does that fit into the game plan here? Isn't that kind of risky?
Well, I mean, look, our business is pricing risk. As long as you see something that has the potential to get to something that's truly compelling and you price it accordingly, I think that's a part of your job. Because I mean, your Janus Lake, we'll see what happens, but our job is to buy 10 Janus Lakes over time. So that whenever you see majors pursuing different things, you have a consistent way of transacting. So you really become that proxy for the copper nickel space that investors will want to own. And so I think that's really how we see the proposition. As far as what Rio will find or won't find, I mean, one thing I will say is, if you look at Australia, they have a recent discovery called Winu, W-I-N-U. And they've only found it a couple of years ago over in the Patterson province. They're putting it into production now, and it's by far the smallest mine Rio, I think, has ever put into production. And what it shows you, I think, is that they're so hungry for copper that they will take the non-traditional route to find a source of production in the right jurisdiction. So when we looked at Janus Lake, I mean, listen, we can't speculate beyond what we know. It looks pretty strong right now. Anything can happen. But given what we saw with Winu, they said, you know what, they're obviously making a big effort here. If they find something that's materially more than today, they don't necessarily need to find the biggest mine that I ever had. They're quite comfortable going to production with a smaller mine as well. So, look, I don't want to overjump in terms of where it is. I think that's irresponsible, but we like going after situations like that as long as we can get them priced properly. And I think that deal was actually a real win-win for us and for Transition Metals, because they got a chance to monetize their portfolio, and they also kept half of the royalties that they had. We picked up a royalty on a project that was of real interest to us. I think the pricing was fair to both sides, but really, You want to have a consistent way of transacting and really being an organic part of the space, because you want to have prospect generators feel like they can monetize through you in a way that makes sense. And then, look, if you do that enough, you will find those winners that really do get into production and they become those so-called company makers. But you got to have a consistent business to do that. I don't think you can be just a one-off transactor trying to sort of rip the skin off every deal. I think you want to understand where you fit, what people want to do, and then if you can do that, I think you can do very well here.
All right. So normally at this point, I'd say, okay, I have a grip for what you're doing or what you've done, the projects you've brought to the table. For an explorer, I'd say, okay, what are you going to drill next? What's the exploration budget? What's that going to cost? In your case, it's hard to ask you a meaningful question without asking you to disclose something that's not public. So maybe you could just give the audience a feel for what are the kinds of deals that you're most keen to see happen, say, in the next couple quarters, a corporate goal for your next acquisitions. What can you tell us?
Listen, that's a very important question. So there's two main priorities that we have. We want to add some cash flow to the company. That's something that's important to us. Kind of as much as we feel like the best source of value in this space is the longer term development projects, which really give you the torque. You're also running a company in the business, so you want to have some balance. We made the strategic choice to start on the development side, but we want to diversify the duration of the portfolio a fair bit. And then, but the rest of it also, we haven't yet bought the entire pipeline of copper nickel projects that's out there. And so we're pretty busy hunting, kind of hunting down more. So I think what you've seen from us so far in terms of whether it's Taca Taca or NOVR or Dumont or Janus Lake, it's going to be some variation of that theme, but we'll also want to add some cash flow. So, but one thing where I don't think we'll deviate at all is the quality focus. We're very strict underwriters. As you can see already, mining is a super risky business, and it really starts with the project risk and the technical risk and the people risk and things like that. So I think that's where we begin, and we really can't pursue a lot of what's out there supposedly considered cheap because we just don't see a way for those things to get into production. But once we see that there's a path for something, that's where we can get creative and really tenacious about getting a deal done because we can see how it fits into our quality benchmark and we want to put that in the portfolio. So that's, I think if there's one thing I want you and the readers to take away is that we underwrite very heavily up front. So, and then once we figure out what we want, then you really go after it so that you can ideally have a portfolio of really the highest quality projects out there, and that will generate value just because of what it is.
Understood. And for what it's worth, I really like hearing, that you're going for cash flow. I understand we've certainly seen royalty companies, see huge returns for shareholders simply based on new acquisitions, bringing in new deals for future cash flow. But I don't know if I'm just a conservative investor. I kind of like my companies to make money. I prefer them not to be losing money, acquisition costs aside. So I'm happy to hear that. Wish you luck with that. I think I understand. All right. So the one last rude question that I always ask everybody is, okay, you want me to put my own hard-earned money into your story? How much of your own have you put in, Alex?
Well, so what we did was when we started, most of it has been sweat equity from the very beginning. We did founder rounds and we all put up sort of some reasonable capital, but I don't think I drew a salary for a year here, while we're putting this together. So all in is all in at that point. You have an idea. I spent a lot of time working for myself, over 7 years as an advisor after I was an investment banker. And what I really wanted to do was create a vehicle that really made sense. At some point you just get tired of raising money for other people, to be honest with you. And you want to do something that makes sense to you. So when we put it together, it's just something that innately makes sense. The rewards here don't come too quickly. It's a matter of just focusing on the right things. So, as far as skin in the game, pretty much all in. Most of my net worth is tied up in Nova at this point. And, we think that this is still very early days, to be honest with you.
Sure. Well, can you say how much, what's the overall management and insiders percentage of shares issued?
We own just over 20%.
Okay, fair enough.
You know,
That's some
so,
skin in the game.
yeah.
All right. Well, very good. Sweat equity does count. Having just started a business myself, I can certainly commiserate with that. Appreciate that. All right. Well, those are pretty much the questions I had in mind. I love the idea. I can't say I'm crazy about the timing, but I can say that cash flow that offsets the burn, the administrative, G&A and that sort of thing, would play really well with me. Any other key points you'd like to make sure we leave with the audience?
I think really, what I think would love the audience to see is that like royalties. I mean, the audience understands obviously what royalty companies are. What we are doing here is you're buying free optionality on the most strategic deposits that the world is going to use for the next 20, 30, 50 years. And you're doing it at a time, the reason you go now, specifically because you go now, it's before everybody has realized how important this is. If you wait until the cycle is with you, well, there's no opportunities left. People are going to have price expectations which are not realistic. It's going to be tougher to transact. You build companies when nobody's looking, not when everybody's looking. So I think that you've got to prove out your theme. You've got to really focus. Make sure you don't put things in a portfolio you regret afterward. And that's really what we focused on, so that the people who have the things we want to transact with Nova. We just on the Taka deal. What I love is that these are private Latin American sellers that took about 20% of the consideration in equity, which is quite unique, both for the location and the stage of the company and the like. It shows a vote of confidence.
In Argentina, people want cash.
Exactly. So I think they see. It's a pleasure when people kind of begin to see what you see. The cycle will turn when the cycle turns. To be honest, we're not in a big rush because I'd love to have the opportunity to do more things before everything goes crazy.
I absolutely get the contrarian premise. I have no argument at all. It's just, again, wearing my newsletter writer hat and as a shareholder and thinking about potential shareholders, it would. I get the company building your hat, but on my side, can I recommend something like this? And then, copper crashes next quarter because the V-shaped recovery turns into a W. I have to worry about those things. You don't so much. And if your shareholders have a long-term view, that's fine. I worry about these things. But I understand what you're doing. I wish you every bit of luck, and please keep us posted on your results.
Yeah, listen, our shareholders from our January 19 financing, they came in at 25 cents. I think we're around 150 right now or so in the market. So I think they've been well rewarded, I think, for kind of their faith in us so far. But again, it's so early. I think copper and nickel are very early in people's realization in terms of what they really fit. And so I think this is something I think you want to own, is just you literally it's your long-term copper nickel play. You stick it in the drawer and you just don't touch it. I think that's the way I see it. I don't know if everybody has that luxury, and I recognize that, but I can't help but just feel that way about it because it's so important.
All righty. Understood. Okay, I'll let you have the last word. Thank you very much, Alex.
All right. Thank you. Bye-bye.